Better turn my microphone on. Hi, everyone, and welcome. Thank you for joining me for Trading Buddies on this Thursday evening for me, the 13th of the 7th. Is there such a thing as Black Thursday? Probably not. Anyway, I hope it's not a Black Thursday for anybody. Hope you're having a good week thus far and maybe banking some money. That would be good. I think we're having a decent week, actually. Let me see what I've got here. A little bit of a problem in front of me. There we go. That should fix it. Kind of has. All right, make sure we're streaming and we'll get stuck into it. I don't see the streaming service up. It'll get there. Sometimes it takes a while. All right, let's start. And as I said, welcome aboard. Thanks for joining us. Those of you here for the first time, welcome. This is a show for you guys, really, and it's all about sharing our ideas, sharing our trades, sharing whatever comes up, really, at the end of the day. I'm going to share my gold screen with you right now and see if we've got a trade coming up for the breakout and open of London session. Don't know how that's going this week. Well, looks like, oh, that would have been tricky. News there. This is yesterday. Obviously, I wasn't trading. Low there. High there. You would have had to wait till news, and I would suggest you don't wait on the news. That one was a winner. Monday was a loser, I believe, if I recall. So it looks like one up, one down, no trade. No trade yesterday. Let's see how today goes. All right, those of you who don't know what I'm talking about, we look to trade the breakout of Asia session on gold versus the US dollar. And that's precisely what we attempt to do each and every day, or each and every Monday, Tuesday, Wednesday, Thursday. We isolate the range, which looks like it's going to be one bar today pretty much. Asia session starts on that candle, the second 1 hour candle of the day. So that's where we begin, and we pick the high, which is here. We isolate that. And we pick the low after that bar, and it looks like that's the low. So that's our range. So what we're attempting to do is trade the breakout of that range and get some profit in the bank. What we're using for take profit levels are the pivots at the moment. So we've got DR1 to the north, and we've got the daily pivot to the south. In terms of reward to risk, I think both are poor, and I don't like where that candle is either, right on our entry. So I'll give it a minute or so until the open of the session, the open of London. And if we haven't had a pullback, I'll probably not trade this for that reason. Okay, sorry, I'm just catching up on the streaming service. Make sure it's there. Jolly good show. Okay, reason I don't want to do that is if we're entering at the top of this candle, it's only got to move a fraction before we get taken into it and then potentially drawn back out of it. I much prefer to see price in the middle of the range when I place these orders. And also, you've got the pivots dead ahead at poor reward to risk. So I probably won't take this breakout today. Though it does look extremely bullish, I'd have to say. The dollar's still having problems. And I'll get to that in just a tick. That's good in some ways if you're trading against the dollar, or buying against the dollar, or selling the dollar against something else, as I am. Okay, we're not going to do it, guys. Right, there's the open. I'm not going to enter long here. So there will be no trade there today. Righto, so let's get off gold and move to something far more interesting, which of course is the trades that we are in. When I left you guys on Monday, we were still in dollar CAD, I think. When did we trade dollar CAD? Daily chart, we traded this bar here, right? So we've been in that since Monday, yeah. Okay, I've moved my stop loss into profit. We sold, it's not that candle. What did I trade this on? Yes, I did trade that candle. Stop loss above it. So as you can clearly tell, we're well into profit here. I've taken my first profit. I took it about 7 pips early. There was our first take profit level right there. I took it about 7 pips early because I was at end of day and didn't want to go any further without banking. And I missed taking second profit here because I was sleeping. This, of course, happened in last night's news events, which was dollars, CPI, and Canada interest rates, I believe, which had a bit of a whipsaw effect. I will take some profit back at this trade line, which is this line here. Actually, can move a bit now. That was on a daily basis, I think. Let me go a bit wider. And a bit wider still, yes, that was the daily trade line. So I will take some profit because it coincides with the lows here. If we can get there, of course, we're not there yet, but we're not far away. So getting DS1 today will be my target for taking a second profit. Already moved my stop loss above yesterday's candle, so that's also in profit. So effectively, we've banked twice already. The first one's in the bank, and part of the second one's in the bank. Hopefully the full lot of the second one will be in the bank by the end of the session. And nothing else to do but continue to watch the dollar falter. Somewhat against my my thesis, which I'll give to you very shortly, but we need to update a couple of other things. Oil, which is a very similar trade, of course, against the US dollar. It is a beast of its own, of course, but we did trade this one as well. I think I warned you guys that if we got a break of that trade line and a retest of that trade line with the bear bar, then I would put an entry above it. And that's exactly how that played out. So we've got oil in at this price, heading for there for TP1, which is a little, nearly 1.5 to 1. I might have been a bit ambitious with that. And as I said to my guys this morning, if you wanted to take profit here and are in this trade, you are at 1 to 1 already. So it's not a bad idea to bank something here. I haven't done that. I'm waiting till I hit my first take profit target. And hopefully that happens in this session as well. It will depend a lot on how the dollar does or how traders react. British traders react to the news of last night, the CPI figures. I think they were short. Ash will update us on that very, very shortly. I did take a trade yesterday in this session, and I don't know if any of you guys are in the Slingshot Ultimate group, but if you are, you would have been alerted to a trade short on euro versus the dollar on the hourly chart from yesterday. Wasn't perfect. It actually didn't play out. But the trade line was kind of there. And we had an untested daily pivot. I think DER1 was up here somewhere as well. So I did say in my analysis that if price at the time, I was looking at this candle here, it was forming. So if that candle was bullish and closed on or about its high or the trade line, I would place an order short underneath here, put my stop loss above here. I did exactly that. And had you followed the rules, you would have been okay because you would have taken profit. I think there was a 15 pip risk and you would have taken your first profit at 6 or 7 pips. I think it got to about 8 pips before the news, and the news just shut it down. And that was all she wrote on euro versus the dollar yesterday. No daily pivot test, unfortunately, because that's where the profit was. So today we'll still be looking at a daily pivot test, and at this very moment in time, it doesn't look anything but bullish. That is euro versus the dollar. And if we have a look at the dollar index, as I said, my thesis on the dollar was that we would fill this void up here. Well, quite the reverse has happened as a result of, well, I assume as a result, it was in a down movement anyway, perhaps forecasting or preempting what that news was going to say. But certainly since that news has been released, the dollar has continued to plummet. It's a very, very strong and vast waterfall. There may not be any stopping this anytime soon now. If I have a look at the weekly chart, we are at a slight support level, I think. Yeah, it's only slight, though. I think this has still got plenty of room to fall now. Very interesting. Now that they're on the dollar and giving it curry, it might be a very, very hot curry, and we'll see how that pans out today. As I said, it's all good for me because I'm trading against it on 2 occasions, and we're getting ka-ching in the bank the further it goes down, so that's all good. As far as today's concerned, I've got 2 on my watch list, and we've got a few game changer bars. I'll just quickly point them out. Aussie versus the yen is one. And sorry, that was the weekly game. Oh, it's a game changer today as well. Daily pivot, suggesting that, daily chart, suggesting that we buy. Well, so far that's panned out. I don't know how far beyond the monthly pivot that will go, but the direction from the game changer was accurate. Aussie versus the Kiwi was the one I'm more interested in, suggesting that we do go short. Don't know, and I didn't trade this bar. I was waiting for something a little bit better. I was waiting for a daily pivot test, to be fair, and we got that with this bar here, but no trade. And of course, I'm not in front of the chart at that time of day. I'd still like to see a bit of a pullback here before I entered that short, but I do agree with the directional bias. We've had a 3 amigos broken down, retested the weekly pivot of 3 weeks ago, got a second phase, and then got another retracement back to the breakout level. And that candle to me looks as though it may be a continuation of the now new trend, and that should get down to this area here, one would have thought, if it does indeed take off. That's Aussie Kiwi. Second one on my watch list today is pound versus the Aussie. And I'm afraid it's a bit too late for that. It wasn't a game changer bar, but again, I was looking for a pullback to the daily pivot, which would, of course, given us a lovely bounce and lower high off the top of that broadening price pattern. This looks as though it has plenty of space to go down, but now entering is not an option. I need to wait again for a pullback. It's pretty much wait for pullback day for me, and that's on pound Aussie. That's kind of where I'm at in terms of trades in the market and potential trades. I think the potential trades are a little way off yet, but trade management, of course, will be paramount as I go into the next phase of this dollar sell-off. As I said, I'll probably look to take profit at DS1 today on dollar CAD. And on oil, we're still waiting for our TP1 up here, which, as I said, was about 1.5 to 1. If you wanted to take it now at 1 to 1, then I would suggest that's not such a bad idea. Righto, I want to find out what was said last night, pretty much in the Canadian banking. But, of course, we saw what happened when the Fed or the was it CPI on the States last night, Ash? I think it was.
Yeah, CPI, inflation data right the way around. So we had CPI and we had core CPI.
And they didn't like it for the dollar anyway.
Well, no, I mean CPI dropped to 3%, which is the lowest level for a couple of years after seeing such a huge rise. And I think the interesting thing really with that CPI is that it has gone down by 3 times the amount. You know, so the high was back in fact, sorry, the high was last year. Actually, this time last year, interestingly, 13th of July, this time last year. So almost within a day. In fact, yeah, within the day. It was yesterday. It was released on the 12th, but so the 13th was the print of 9.1%, and then now we're getting down to 3%, and that particular level is not a level that we've seen since May of 2021, when it was at 4.2%. So that was when the climb started, was really in 2021, and now we're getting all the way back down again. And I think maybe the interesting thing to look at with the dollar, to a degree anyway, is where was it in around about May 2021? So if we have a quick look, let me just share my chart.
Dollar index. Okay, yeah, if you got it there, happy days.
Okay, here we go. So this is the dollar index. Now, if we go to May 2021, all the way back here, that's where it was. Just before we started to get that huge climb in inflation, this is where it was. Now, that's not to say that it's coming down there, but that looks like a pretty worthy target. You know, if you're kind of considering the push in the dollar beforehand was appeared to be down to this. Now, the reason that you can't say with any real certainty that it's coming back down there is, of course, we don't know whether the inflation picture changes again back to showing that they haven't really kind of beaten the inflation narrative or not. But still, you know, if you kind of go on the premise that the trend will continue and we do actually see the inflation narrative come down, that would suggest that this is at least dropping down to, you know, these levels down here. Now that was at the start of 2023. So basically reversing the whole of the last the whole of this year's gains. If it comes back down to that particular level, but it looks like it's got some room to travel, as you quite rightly said, mate. It looks like it's coming back down here now. If the Fed do start to, you know, possibly pause and maybe even reverse their decision, then we're going to see the dollar down there relatively swiftly. Now, of course, this is going to be stacked up mainly against the euro and the yen, but the pound's a really interesting one. Because if we go with the same premise, this is where the dollar was against the pound just before its inflation picture really started to kick off. And we've not seen inflation dip from the United Kingdom. We saw some pretty ugly, well, not ugly, but, you know, we are seeing contraction in the UK economy. Not as ugly as people expected, but it's still contraction in the UK economy. But the inflation narrative still continues to be pretty hot. You know, we had average earnings still really high. We're still way up there with the inflation data. So this does suggest that this has probably got some room to travel. And I think maybe the UK is going to have to, the Bank of England, if they trust their stance of beating inflation and say that it's about raising interest rates, then you would expect this one to continue to the upside. I mean, at least to this point. So that this one's got some room to travel as well. You know, maybe at 132. Maybe this area eventually is going to be seen as well at 136. So this one looks like it's well on its way. You compare it to the euro. This is where it was you know, before the inflation narrative started in America. Same sort of thing. It seems to have lots of room to travel and some really useful levels up here as well. You know, and that's within the kind of realm of error in this kind of environment. So that looks like it's on its way there.
So the monthly has triggered there, mate.
Yeah, definitely. Yeah, definitely. It certainly looks that way, doesn't it? I mean, if you know, it's difficult to kind of find. You may well find some technical levels. Now, of course, we can't really just trust these levels, you know, without any kind of development. So we do need to see the continued development. We've got jobs data today from the United States, and I suppose you start to see that also weaken, then that's another reason that the dollar takes another leg to the downside. The Fed, I still think, are probably likely to raise one more time, but it does look like they're towards the end of their cycle. Whereas, you know, you look at something like the pound, environment completely in the UK.
Yeah.
I still find the Swissy quite surprising. You know, that the Swiss franc has managed to really show its strength over the last few months, and it continues to be one of the stronger currencies. Now, I know that there's a little bit of currency control, but their inflation numbers are way down. So this is where it's not, I guess, just a zero-sum game. You say inflation's going up, so I'll buy this currency, and it's coming down, and I'll sell that currency. It doesn't really work like that. You know, same sort of thing with the yen. You know, we all of a sudden start to see the yen strengthen, and of course, with the yen strengthening, then it kind of suggests also that there's a possibility that the Bank of Japan don't need to do anything. You know, don't need to do anything too drastic and too extreme, because the market will do it for the country. So the new governor, I think, has kind of created some sort of strength in the yen. We see it come all the way up to this bar, test it, and it has started to sell off. But does it go beyond this level? I'm not so sure. You know, still not completely convinced about the yen.
No, for a good reason.
Yeah, and the Aussie obviously sort of has managed to get a bit of a boost, and the Kiwi getting a bit of a boost because of the commodity prices and the potential for further growth. But I think there's still enough headwinds out there to suggest that we're getting now over exuberant in the opposite direction. And you can see that with the Nasdaq mainly, because the Nasdaq just won't come down. I mean, it's just an astonishing chart, really. The Nasdaq, just the strength that we've seen in this, it just hasn't stopped. And if you look at the cycle, we were talking about the cycles. This is the low here. There's the low there. Now this one started kind of coming down. I guess you could say that was the bar, but it's one of these two really. Now, when you look at this across, it's 41 bars across, and where we currently sit is right near that area. 41's here, so it does suggest that maybe another couple of weeks, and there will be possibly the start of a new cycle with the Nasdaq. It's one more week in, just there, and the level that I'm looking out for is here. That's the areas, and we're not quite there yet. So another little push to the upside, I think, with the Nasdaq, maybe another 1%, about another 1% push with the Nasdaq. Then I'll be wondering whether this will start to top out and possibly roll over, because valuations are going to get extended up here. But now we've got earnings season starting next week, with the banks kind of starting, kicking everything off, and the big tech giants don't report until week 3. So that may well work quite nicely with this. If you think this is at 39, and we've got next week we've got the banks, and then the following week we have the tech giants. Do those tech giants start to show some weakness? I don't know. It's very, very difficult to say what's going to happen with this. We might even find it all the way back up here. But again, it's going to get even more overextended the further it pushes to the upside. But it's looked like it's going to be topping out for quite some time, and it just hasn't done that. Now, of course, the data does enable investors to have some confidence that they have got they've got something to go on here, but there's still sort of a bit of a surprise to me that we've kind of seen the push in the Nasdaq that we have, because it's not that far from its all-time high again, and yet we got interest rates at 5%. So we got a lot of free money, if you like, a lot of risk-free money, I should say, that is out there that is paying way higher than any dividend that you're going to get from any of the stocks in the Nasdaq. So I know the AI story is kind of boosted.
I'm going to say, is this got a big say in it?
Well, it did. Do you know what? That was the
realization of it.
Yeah, that was really not the start of the move, but that's been the boost. As soon as investors saw those numbers come out from Nvidia, and the Nvidia stock just absolutely wiped Wall Street's estimates out the park. That has been the trigger to kind of keep the Nasdaq elevated, as kind of like things change over to AI. And it's interesting because, as I said before, there's always something that seems to kind of give us these over exuberant moves, and it was crypto a couple of years ago. The crypto story has died down a little bit, and there's still kind of people that are hoping that crypto go back to where they were. I'm not so sure whether that will be the case now. I wonder whether crypto may well have to become a bit of a sleeping giant, and possibly we do see it, have its cycle again. But I'm not sure if it's going to be quite as swift a cycle as many have hoped for. It's still an incredibly volatile.
Are you saying that we're stuck with this same monetary system for some time yet, or there's something else that may replace the current?
Oh, I think
system?
something else. Yeah, something else is on its way to replace it. I mean, we got CBDCs, not that far away. That's going to change the environment. We obviously do have some dollar weakness coming into play. Gold has had an amazing move, and I'm a bit gutted about gold because I was in this, but it didn't play ball when I needed it to, so I ended up getting out of it. And now we were talking about this bar here as an entry for you, and that's obviously would have
we spoke
that would have
about
hit 1-to-1. That would have hit 1-to-1 now. But gold really does come front and center. What I find quite interesting about gold, though, is that you look at gold, and this is effectively against the dollar, and you can see it kind of boosting to the upside. You look at it against the Aussie, not quite as impressive. In fact, nowhere near as impressive. You look at it against the pound. Some elevation, but nothing major really kind of going on there. You look at against the Swissy as well. That this is kind of suggesting that that it's not doing that well. So the interesting thing about gold is that even though if you look at it against the dollar, it looks like, okay, this thing's really hot, we should get going on it. But all it's really suggesting, if you look at the others in comparison, is the dollar's weakness has really set in. The one thing I would certainly caution about is this is a weekly chart, and we've got 2 more days left. So is it possible that this becomes a bit of a false break, and we actually end up right the way back at that 101 level, and we actually see that the dollar supported? And I'd say it's a bit of a difficult one because the Fed are also due out relatively soon. Are people not bothered about what the Fed do next? Are they suggesting that which they seem to have been, that seems to have been the case for quite some time. If you track this move to the downside, the Fed have been raising interest rates all the way through this. Only pausing last time out, and yet the market has sold the dollar off. So this is where you sort of you wonder whether, and this is the same with the Nasdaq, when they pause, does it all of a sudden suggest that there is concern in the economy, in the economic situation? I'm not saying the dollar gets a boost from that particular point, but is that the trigger that sends the things like the Nasdaq and the S&P to the downside? S&P actually very, very close, not even a 1% move away from a similar kind of chart area as we are looking at with the Nasdaq. This is at 45.40, and this is currently, so there's another 25 points there to the upside, which when the Nasdaq, when the S&P is at 4,500, we're talking about 0.5%. Another 0.5% move possibly to the upside before it finds some heavy resistance, if we're not there already. 0.5%.
I'm actually stunned that we're at this level.
Yeah.
Given the circumstances, it just doesn't make any sense.
No. This is the thing, mate, and this is the
money's so tight. It's you can't understand it.
No, I don't really understand it either. Do you know what? The thing I don't understand the most is the fact that there's so much risk-free money in the market. At a 5% interest rate, that there is a risk-free base that you can get, rather than kind of like buying these companies that weren't very good value here, all the way down, weren't very good value. Now all of a sudden they've become really good value. Now what happens when the Fed decide to kind of like cut interest rates? Then does that mean that you picked up good value all the way along here, or during these points? Because it suggests that we're just going right the way back through the highs. The recession that we've been expecting hasn't materialized, but I can't help wondering what happened to the banking crisis. It just disappeared. It didn't even
Yeah,
it didn't even kind of like recede. It just disappeared. It was there one
can't
minute.
believe. I think it's been conveniently shoved under the carpet, but I don't know how and for how long.
Well, this is
I don't think
yeah.
we've heard the end of it by any stretch.
No, I don't either, mate. But you know, this is where I start to get a little bit concerned. You know, a little bit more. I guess I am a bit bearish on stocks just because of their valuation, just because how high they are. But this is where I think the concern comes in for me, is that the focus of the market seems to be in one direction and one direction alone. You know, it's focusing on one sort of side of the data, and therefore the likes of the news channels and corporations, all, you know, they seem to sort of like, you know, make sure that they get anybody with a bullish view of the market seems to come on and talk. But I mean, I know the bears have receded because you can just look at the COT data and they've just, you know, they've just collapsed their positions to the downside.
Yeah.
But there are bears out there. You know, what's the other side of the argument? And the other side of the argument is probably the things that have been swept under the carpet and just not being discussed. But in saying that, the raw data, you know, the data that we all seem to be akin to, like the CPI data, it is pretty bullish right now. But I think the concern is not disinflation, which we're getting now. It's deflation, because the move to the downside has been, you know, in inflation data, in CPI, not in core, to be fair, but in the CPI data. Now that is the food and energy. So the move to the downside in CPI data has been so extreme. Does it just continue to go and actually fall into negative territory? Well, we have seen that in China. So I don't see why it wouldn't necessarily then permeate through everywhere else. And then all of a sudden, you know, things just aren't good value anymore because companies are selling for less than their product is actually worth. So I don't know whether we've kind of hit that sweet spot where inflation kind of comes down to the point where it looks normal again. You know, we hit the 2%. But I suppose my question would be, if we've dropped from 9 to 3 in 12 months, why shouldn't we drop down another, you know, 3 times down to 0 in another 12 months? Why does it just stop at 2%? You know, I can't see how it can. Yeah, but how can they control it so perfectly that we're at 2%, and now we can lift the lid and everything's sort of like back to normal? Surely it's going to come down lower than that 2% target, and we actually sort of like possibly see a deflationary recession kind of come in. That would be the sort of like the big question that I would have. You know, have we hit the sweet spot? And
my question would be, are we seeing this in real terms? And that is at the cash registers and at the petrol pump and, you know, everywhere that you need to see this effect. And of course it takes time, I suppose, to kick into gear, just as it does going up. But I don't think anybody's seeing any relief at the moment in Australia here. There's still lots of pressure.
Yeah, absolutely, mate. Well, with I mean, certainly in the UK, it's a worse situation because of the way that inflation is. We've got a potential situation where the interest rates possibly continue to go higher, but certainly stay where they are for at least another 12 months. You know, they haven't done a very good job at all. Whether it's down to Brexit or what, I don't know. I mean, you could certainly make that argument, and I think a lot of people would listen. But I don't think, you know, I haven't really trawled through the numbers with any kind of major detail to say that with any real confidence. But the inflation narrative here it suggests that people will stop buying. Will have to stop buying goods. We've got GDP data that was released today that did fall into negative territory, and it's not awful. You know, the kind of the territory that it is in, but it is in negative territory. We see the where is it? So today, isn't it? Which is Thursday. Inflation data. Sorry, GDP. GDP month on month, negative 1%. Sorry, negative 0.1%. GDP year on year, negative 0.4%. So we do actually sort of like see that there is contraction in the UK economy. And I guess this is my point, is that we seem to be bubbling around zero. Why is the anticipation that we bubble from zero upwards? Why wouldn't we kind of go from zero and just take a bit of a dip, you know, another dip to the downside? I don't see why that wouldn't happen. So so that's what I'm looking out for. Now we seem to have lost Jeff. Jeff will be back in a minute. I don't know, what do you guys think in the room? Anybody got any opinions on this, on the way that we see the markets, just the way that the markets have taken off? You know, are you guys sort of anticipating further kind of moves to the upside, or has it got too hot? You know, are we in a situation where it's not going to take a lot to kind of tip this down and start to switch it in the opposite direction? It certainly would appear to me that that's where we currently sit, just you know, at a position where this market is just teetering and very, very tentative, but we don't see any signs and signals. You know, if there were signs and signals, there was one there, but now we start to take off. Now this week isn't done, and I think that this is going to be quite an interesting couple of days. Today we have core PPI from the UK, from the US. We have initial jobless claims from the US as well, and then tomorrow we've got consumer expectations. So there might be just a little bit of a hint of what's going to happen from the consumer numbers as well. But it just, you know, it just beggars belief how the market can stay this hot for this period of time without any kind of really, you know, a couple, I suppose, but not any real test of any of these levels where it came from. This is always the concern. Hasn't tested this point here. This was the next point there. So no, I mean, I suppose, you know, that there was some resistance there, but it didn't really test. I suppose on a daily it would have done, but it haven't come down and test on the weekly and managed to kind of create a genuine higher low here. Then it went through this level. This is the S&P. Hasn't come down and created a higher low down here. Now we're at this level here. This is the point that you would suggest that, okay, well, there's another resistance point there. If it doesn't stop there, then it's going to there. And does it then have to kind of collapse and test all the way back down here again? Or do we kind of just manage to get ourselves into a zone where it has to just, you know, test this point here? I don't know, and I don't know what you guys feel about it, but this market is just, it's hot and it's looking too hot. One thing that I would look at on an indicator, and this is the problem with the indicators, is that you know, they can't tell you the sentiment. This is the relative strength index for the S&P, and you look on the weekly. Overbought. Now, last time it was overbought was here, and it took a few weeks, and then it dropped down. This was the next time it was overbought. It came up, but eventually took a few weeks and retested the level. This is what we're trying to see. These retests here. That was an overbought scenario. It didn't really kind of it didn't do anything. In fact, if you look at where it came from, this area here was tested a whole year later. So this might even take a whole year to kind of come back into focus and retest these levels. This time it was overbought and sold back down and kind of hit the 50% line, which is really what I'd want to see. I'd want to see it hit the 50% line. Huge overbought point here, which that was during COVID there. There it is again, comes down eventually. That was the point it hit overbought. Did it test that level? Yes, it does, but it took, you know, took some time. There was the last time it hit overbought. So really, if you kind of go through your charts and look back at these particular levels, it suggests that when it hits that overbought level, this is just a weekly chart, but you can do it on just about anything. when it hits these overbought levels, it will more often than not eventually test that point. So what we've got really here is, well, that's our overbought level, and I suppose then it could come back up here, but that would suggest that if it comes here, it is going to drop back down and test this overbought level. When you look on the monthly, monthly's a little bit different. You know, the monthly, we don't have these overbought zones here, but the monthly, it would appear that it needs to come back into this area, back here, before kind of having some real confidence. But you know, all we got, I suppose, only 2 months of upside. Now we can see that there's just a stretch to the upside where you just see month over month over month, where it just manages to kind of gather some pace. And using all these tools to kind of see where it comes back to. Not even a 23% retracement. You know, when was this last happened? COVID. When COVID happened, the retracement was to 23%. That would have been the last base there. That retracement there, 23%. Then that base there. I mean, this one actually, oh, there you go, 23%. When it did reverse, it was 23%. And that was the last base there, but obviously that one just came straight back down again. You look here, there's the 23. So that kind of suggests coming back down on the S&P, back down, I don't know, to maybe a 5% dip. So that's potentially what we could be looking at, a 5% dip. No, this is the dollar, and the dollar probably, you know, again, you'd kind of like be looking at these lower levels. Very difficult to see where the dollar changes. This area is pretty crucial, you know, for the dollar. I don't know what is going to change this over. Now, the interesting thing about all this is that if you're in already, then it's fine. But as soon as it kind of gets to these points where there's a possible turning point, this becomes dangerous. This becomes a really dangerous play, because the buyers are waiting for something just to kind of give them a reason to get back in on the long side on this. And they know if they have a reason, looks like it might even come down there. It looks like if they do have a reason to kind of get in on the long side, then they will probably buy it up pretty ferociously. They'll probably really want to kind of get going with this thing. So it is a dangerous point. Now, what this would look like to me is that the dollar comes down here, then it hops to the upside. Then, if there is going to be a drop, it's going to continue to drop down to these lower points. You know, if there's going to be this point down here, and because of that, that is suggesting that the move down here is already on its way. You know, you haven't got as far to the upside. Sorry, you haven't got as far to the downside as there is the risk to the upside. The risk that this ends up on a monthly chart just popping back up into this area, and actually the dollar starts to push higher. It looks unlikely, because this was all to do with the interest rate rises, and we are now at the point where, you know, effectively investors are suggesting that the Fed is done. But when you start drawing kind of lines on this, it's you know, you could make a case anywhere. You could make a case here for a pop to the upside. You could make a case down here for the pop to the upside, or here. You know, there's lots of places. But the question is, what's going to be the driver that takes this in the opposite direction? It could be jobs numbers, but it might need to be something completely different. So, given that, anybody got anything they're looking at? Any sort of currency pairs they're looking at? And I'll take a look at it, and we'll see if we can kind of get an idea of where the currency may be going. Because one thing about this is, we're all using indicators. We're all using weekly pivot moves, and some of us are using like super trend, or some of us are just looking at the charts. Really, when you look at this stuff on a monthly, as an example, really what you're trying to find is, where's the hot market? Because then it doesn't really, if you can read the chart and see where the hot market is, if this all of a sudden pops a weekly pivot to the green side, and let's say it's down here, it's in this zone. Let's say this does pop down, just another one, and it's sort of like it's living somewhere around here. And you see a weekly pivot pop into the green side. Well, I wouldn't really be that interested in that because of where it is. I'd be much more interested if we saw it touch this area first and then give us something to the green side, because it becomes a potentially a bit of a choppy zone down at that point. So really, what we're trying to do is find where there are the extremes, and you can start drawing them with trend lines or horizontal levels. Find these extremes and see where does it start to change. This point here was support, and it became resistance briefly. So when it comes back down here, you see a green thing here, then it's interested to the upside. It doesn't work out. So then we're waiting for the next one, and then you're basically sort of drawing this and saying, okay, there it is. Now it pops the upside. I'm a bit more confident. Often you're going to see this head fake. This first one was a bit of a head fake. It tried to push up from that particular point, wasn't able to do that. It managed to find it down to the next point here. Then it starts to pop up. Now all of this zone here is a buy zone, really. Difficult to know when it's going to turn, of course, but this is the last point of support right down here. That was the last point that it came up and found support and then just went. Now this gives way, then the bears are in charge. But until then, really, we're still in a situation where this is still bullish in accordance to the monthly. This is still bullish. So until the end of this month, we don't know whether the dollar is going to buy or sell. Now, trying to mess around with the dollar in this particular area is incredibly dangerous, because you're too late to get in on the short side and way too early to get in on the long side, and you don't need to. So at this point, I'd be waiting until August to say, okay, if it held and we get a move to and we get a signal that there's going to be moved to the upside, then I'm a buyer. But otherwise, there's no point. And you can go through every chart like that. Look at the Nasdaq. The Nasdaq is at this point, really, that was the closing highs. Now the difficult thing with the Nasdaq is that these levels here hasn't really been taken out, but the upside is looking way too fresh. And it's possible that we are basically at resistance up here somewhere. I don't know where it is, but it looks more than likely that there is some resistance up here. So that means if there's a signal to the downside up here, then we can. It could be another head fake, but we could see if there's any interest, and we'd have to go down to the shorter term time frames to see where that's going to be. Now the trend lines on this are steep. That's a long way down. Don't really garner that much information from the weekly. The weekly needs to take out this area here, which is where the monthly pivot is. That takes out the monthly pivot, then you're a bear. Being a bull, as I say, it looks a bit expensive here. These are the dailies. So the dailies, the trend lines are all obviously going to be a little bit steeper on the dailies, and the daily needs to take out the same zone really. Takes that out and it takes this trend line out, then it would suggest we're actually going into bearish territory. But right now, nothing, no situation can suggest that we should be looking at the bearish side. If it touches this level and we see a sell-off, really, we'd want to see this taken out here. I don't know what that's going to do. That's going to be too much. We want to see this taken out here. And then which is these lows here, then you can start to look for downside. So the NASDAQ isn't really that attractive because there's a bit of weighting there, and upside, I mean, it looks like it's just going to continue to go, but dangerous. This is the same with the Aussie dollar. This really is, it's bang on resistance. So you see signs and signals of reversal here, then it's going to be of interest. Now that's on the daily. So so this would be really for those traders that are trading intraday, you'd be sort of looking for shorter term moves to the downside. There's the level. That's the before on the 4 hour. You can't really look for a short until there, unless it creates a different pattern in here. Yeah, you see, there's nothing there which is suggesting short. So when you miss the move, I guess the point with this is when you miss the move, you know, this all happens, and you're thinking, well, what do I do now? Do I hop in on the long side? Well, very dangerous. You can, and you know, there's probably some quick money to be made, but it's dangerous. Hopping in on the upside is dangerous, but waiting for signals to see this come down is the wisest thing to do. Now you can see this on the dollar yen quite nicely. When this started to push up, now really during this period here, when this started to push up, there was a chance that this bar would create some resistance. You can't really see it so well on the monthly, but when you look on the daily, sorry, on the weekly, what we basically have is that point there, and the lower the bar there. So you can see that there. You go down to the daily. What does this need to break? Well, that is obviously the first kind of point, but it's very shallow, very, very shallow that, you know, that this would break, and a big move. And this is the danger. You know, when you see such extremities in the market, this is the danger, that it just triggers in and it just goes without you. These aren't the easiest things to catch. And that was the only hint. That was the only hint. We'll remove this. Let's get rid of that. There. And a very difficult one, but what's ended up being incredibly lucrative. 7-to-1. That's a 7-to-1 trade in a matter of a week. So this suggests really, you know, when you start to see these kind of these big long moves, the 4 hour can give you a decent enough signal to have a punt. I mean, it doesn't matter if you have a punt and you get run over 5 times in a row if it's going to give you a 7% job. So if you're looking at these, you're looking at this on the Aussie's not quite as hot as we saw with the NASDAQ, but definitely with the pound. You can start to look at this on 4 hour charts and see if there's any sort of hint that this is coming down. This was the first point here. It did actually collapse a little bit, but then since then, higher low. That higher low wasn't closed below. Another higher low, another higher low, another higher low, and there's one here. So really, the area to take out with a pound, if you're looking at short, is got to be under this level, probably whereabouts the daily pivot kind of sits. Nothing else to do here, unless you're willing to get in on the long side on very, very short-term time frames. No, I think Jeff might be getting to me here. So are you guys seeing that? You guys seeing what I'm talking about with this? You know, when the market is, if you find a hot market, this is volatile. This is, you know, if you want to find sort of something which is, you know, tradable, you're looking at volatility. Now, if you look at this big move to the downside. Now here, when it comes down to this point, the anticipation is that this is a buy zone. Now, if we flip down to the 4 hour, in fact, let's flip down slowly just so I can get it on screen. There's the weekly. You're not going to get much out of the weekly. It's going to be of no value at all. Now here's the 4 hour, and there's the zone there. So the 4 hour initially, it didn't make that much. It's about a 1.5 to 1. But let's say you're after something, after a proper move here. So you leave the trade on. You could make it safe. Then it breaks out of this level here, and it comes back and tests that level, and then it goes. And there's the low right there. And actually, again, you would have been able to make that safe, but it does take another leg to the downside. I'm just going to mark this off. It takes another leg to the downside. Now let's find out where support. Oh, I can't find any more support and resistance. I haven't got it in. Maybe looking at these lows here would have been another option there. So this becomes quite an interesting zone. Now that would suggest that that's going there, but as I say, it's a dangerous path now to be coming to that point there. Let's look at this point here. So I'm on the monthly here. Now you can see that there was some support here and some support here. Now what we're looking at again is what does it look like on the 4 hour? And let's see how many times. So it didn't quite get to the level there, but it bounced there. How many times would we have tried to enter this market and lost? There's a loss there. There's a loss there. That's 2 down. That's 2% gone. There's a loss there. 3% gone. Now, when this one goes and comes back and tests this level, even if you're really, really conservative and have it down there, well, there's the 3%. There's the 3% around about that point there. So this is now in profit, but it does actually start to come down again. But that is a point where it gets quite hot, really. And then when it comes back down again here, it gets hot again here on the 4 hour, and it goes again. And it doesn't really test. That was a difficult zone there. And it gets hot again here on the 4 hour. Even if you're using the simple thing where you're looking for a break and a retest of an area, stops at the swing low down there. Well, that's up 4%. But you might need to have a few bites of it. Now, after that is when you want to bring the indicators in. Forget the pivots and forget moving averages and everything else. That's the point to bring the pivots in and see if they confirm or deny what the thinking is. Now, this week, the Aussie yen was seasonally the strongest currency pair. Now, I was starting to doubt this one as it pushed down so low, but it came down so early in the week that it might end up at least pushing back up to this point. Now, what's a little bit concerning here is that the yen starts to really extend its legs next week. So the yen becomes the most prominent currency pair. The most prominent currency next week. It becomes seasonally very, very strong, and the narrative and the environment seems to be right for the yen. And what's the concern here is, even though this tends to have a strong seasonal bias to the upside, it's still bearish. It hasn't had a strong seasonal bias to the upside, but it's had a hold. It looks right now, by all intents and purposes, that the best this can hope for is a hold. And that suggests that we should be looking at Aussie yen shorts. And this would be actually, quite an attractive position to try and take. So let's see what that now. Here's the retest area. It's either there or the tail's there. Now, of course, the monthly pivot is likely to cause a little bit of resistance. So you know, it might be this point that we start to see, but we want to see really again now on the 4 hourly. What we don't have, this is the low currently. So it's really got to come all the way down there, test that low, and then look for the short. So what we're really looking for is a bit of support up here. This continues to the upside. Whoops. This needs to continue to the upside really, and kind of hit something in here where it would then pause. You know, create some sort of lower bar, maybe create an upper bar as well of some description. Then looking for you know, under 95.10. So pre-preparing to you know, to try and get what you might need to see is quite wise. I would never just open a chart and say, okay, this is going up, I'm going to buy it. I'd really want to sort of like try and preempt what could happen. What do I need to see really before I take this one to the downside? Even with levels, you know, even sort of like putting those levels in. What happens at those levels? Can it get to those levels? And if you're on the low side, aiming for those upper levels, absolutely fine. But if you're already halfway up, it's just a bit of a dangerous task. So trying to draw in what you'd want to see is quite wise. You know, that's what I want to see before I traded it. Which means that I'm completely omitting any signal that's down here. Now you may look at it and say, actually, I like the monthly pivot. So then, you know, you'd want to see what chart pattern you want to see down here before you go in short. But that would be the area I'd be interested in. You know, come up here and create some sort of pause in the market, and then see if we can get the sell-off. Okay, well, Jeff's not getting. I've just seen somebody else come into the room, but I think we're probably going to wrap up because Jeff's not come in, and having not really had any questions. If you guys have got any questions or something you're looking at that we can all look at, then I'm more than happy to stick around. But if there's not really any comments from anybody in the room, and without Jeff, then we are 3 minutes from the top of the hour. So I think we'll call it a day, and then come back on Monday.
Probably the only thing.
Sorry,
hi,
Phil.
How you going, mate?
Yeah, good. How are you?
Yeah, pretty good. Well, the only thing I was going to point out was the 11th, the time by degrees date we had on the FTSE worked out well.
Okay. Let's have a look at that, mate. It did. You're absolutely right. Yeah, it was looking for the reversal, wasn't it, down there?
Yeah. Yep.
Yeah, that did work out really well, and a huge boost actually. Now, all of a sudden, after those CPI numbers came out. Oh, brilliant, mate. So, what's the next one we're looking at then?
I'm not sure. Hang on, just give me a second.
Yeah, go for it. Go for it.
Just give me a second.
Yeah, time by degrees in the FTSE seems to be working very, very nicely, doesn't it?
Yeah, it does. I have got the chart open here somewhere. I've just got to find it. Okay, here we are. Now I need to share. I can't start sharing yet, Ash.
Oh gosh. No, Jeff. Let me see if I stop sharing. Can I give you power? I don't know. Oh no. My thing's frozen. I might get kicked out. If I get kicked out, we'll end the show. I've just got the circle of doom. Yeah,
well, I can just tell you the date anyway. It's the 17th.
17th. Okay, fantastic. 17th. So that's actually the start of earnings season, which is
that's Monday.
That's Monday. Okay, so we could start to see a turnaround in the FTSE on Monday. Okay, so we'll look out for that. I've got the circle of doom. It's not kicked me out as yet, but I've got the blue circle just kind of going round and round. But it means that my charts are. Oh no, hold on, is that gone? No, it hasn't. Zoom is packed in, but my charts haven't. So the 17th. Okay, which is.
Yeah, mate. That's all I had for tonight. Yep.
Oh, brilliant. Okay, 17th is going to be this date here. Now that is interesting because that could take us right the way back up. If we end the week solidly, that could take us all the way back up there and potentially That's going to be a little bit.
I'll just have a quick look at the strength of it. Let's look. Oh yeah, it's looking like a strong turn.
Brilliant.
Pretty good. Pretty
Brilliant.
good.
Yeah.
Out to 120 days, 90 days, 90 degrees, or yeah. So yep, looking pretty good.
That's good, mate, because, you know, actually the FTSE's really reacting off some of these levels right now. It's at a really nice move. This was the breakout point. It moved down, moved back up again. It was down. It's moved from this breakout point. It's moved down, moves up again. Now, if the 17th plays out, that would suggest on Monday we are looking for the FTSE to sell off. Whether it gets through this level, I don't know, but it may. It may well. You know, recession concerns are still front and center. So brilliant stuff, mate. Okay, well, you'll be in Monday with us.
Yeah, I'll be here. Yeah, and there's no potential dates in between either by the look of it. So I'd say that's the one.
Okay, all right. So we've got a couple of days. All right, so we'll put that in our diaries for FTSE 100 to sell off on the 17th. I wonder if the S&P gets something similar, very close to a potential high here, and I wonder whether that earnings season matches time by degrees, and we start to see this one move down as well. So watch out for the stock market on Monday. Fantastic.